I want to welcome everyone to the Cincinnati School Board's Committee on Budget, Finance, and Growth. And we're going to go around the table. As soon as we get the word from Rob, then you can all understand how to participate remotely. Rob, will you give us the due?
If you'd like to speak during the speaking of the public session for the committee meeting this afternoon, please click the hand icon at the bottom corner of your screen, and we will ask you your school association to the district, and you'll be able to speak at the end of the meeting. Thank you.
Thank you, Rob. And now we'll go around the horn, so to speak. Ms. Bruckner, do you want to give us a start? Introduce yourself.
Mayor Secretary to the Board of Education. Good morning, everyone. Lauren Roberts, the Chief Audit Executive.
Julie Sellers, President, CFP.
Jennifer Wagner, Treasurer and Chief Financial Officer. Kimberly Hughes, Assistant Treasurer Controller.
Evan Ashley, Director of Financial Reporting and Transparency.
Thank you. Eve Bolton, Board Member.
Mike Morosky, Board Member.
Brandon Craig, Board Member.
Cody Hutchins, Contract Analyst.
Morning, Ty Brunegai, Manager of State and Federal Grants.
Michael Gustin, Director of Business Technology.
Thank you all for the introductions, and we are here to go through this meeting. We meet monthly, and we have a great staff that is helping both the board to be prepared to do this, and then of course we have the treasurer's top folks in here to provide the expert advice. So we will, if it's okay with you, Madam Treasurer, we'll get started. If you would like to introduce our first presenter.
Yes, thank you. Good morning, everyone. And our first agenda item is our traditional monthly financial report. So we will be having Kevin Ashley and Ty Brunegai presenting for us for state and federal grants. Kevin.
Thank you. So I know you have a lot on the agenda today, so we'll kind of go through this, but certainly if you have any questions along the way, let me know. The first slide really just as an overview, but I'll kind of hit some of those points as we go through the slides. Rob, if you want to go to slide 4. This actually shows our comparison for cash balance and outstanding encumbrances at the end of September for this year and the previous 2 years. You can see that fairly consistent. Part of the reason maybe we're down a little bit is we did have larger advances at the beginning of the year to ESSER funds and other federal grants to cover those things that we're waiting on reimbursement from ODE. Otherwise, and then as far as encumbrances, we did have, as you'll recall, last couple of years we've had the 90-day appropriations. This year we had the full year appropriations, so that allowed for some of those contracts, full year contracts, to get entered earlier. So that's one reason that amount is higher at this point. Next slide is general fund revenues. And as we've been doing, just kind of highlighting where 2 years ago we were still having the foundation deductions for scholarships and community schools. So at this point that had been $19 million through the first quarter of the year. On the next slide, talk a little more detail about revenue. You can see that taxes are up a little bit, which is partly due to the valuation increases. And then state funding is up. Again, I'll caution here, I think we've talked about this before. Last year at this time, State Foundation, they were still implementing the new formula. So a lot of the numbers at that time were based on prior year. This year, our numbers are based on prior year as well. ODE expects to release new numbers with our current enrollment on the next payment cycle, which is next week. So once we get that, these may adjust, based on that. And we'll talk about that a little bit with the forecast as well. Next slide is expenditure comparison for the general fund. Expenditures are up a little bit. Again, we're attributing some of that to the timing and the fact that we had a full year's appropriation this year. Some other specific things that I looked at is salary and benefits. This year we did actually have that 3 pay month fall in September, and last year was in October. So the timing of that, we do have an extra payroll in this quarter. Some lease purchase agreements, later last year, some things as we talked about last month, the treasurer mentioned, some of those expenses were moved to ESSER later in the year. So we're looking at, prior to that adjustment, but that was another area that had some changes. The other thing is the United Way quarterly payment related to preschool promise. In the past, their carryover offset that first quarter payment. So we either had no payment or a low payment. This year, since they didn't have the carryover, we actually made a full quarterly payment this year. And that was about $4.5 million, I believe. The next slide is where we're trying to see what our unallocated budget is at this point in the year. And the percentage there, my glasses work correctly, is 6.9%. And in the box at the bottom, I compared that to where we were last year. Last year, it was at 9.7%. So based on a full year's amount. So that's a progress area I think that we can celebrate. Next slide is preschool expansion. Again, the calculation for tuition assistance, the two categories are below the 200% poverty level, and then above that level. I'm going to talk a little bit on the next slide about the number of students in that category, or in each of the categories. So there's a slight difference in calculation for full-time versus half-time students. And one of the things that the treasurer mentioned last month was relating to half-time and expecting that percentage has increased. And so I highlighted here that 2 years ago, half-time was about 6% of the students. And most recently, it's about 12.5%. So it's nearly doubled over that time period. And then you can see.
Do we have any reason to know why that would be the case? Is it just a sociological reason? There's no financial reason?
I don't know. It'd be something to discuss with Ms. Brooks.
Okay. Thank you.
I just knew that when we presented last month, I just knew that the trend was much smaller back when I was doing these calculations.
Right.
And so it occurred to me that we should probably look at that. I don't even know if it's occurring at CPP at the same rate. That'd be an interesting concept too.
All right.
Just quick question
Yeah,
on
please.
that. I think the other thing to think about also is if we looked at fiscal year 22, the actual number of half-time students nearly doubled to fiscal year 23. And so that idea, maybe to Eve's point, or to Board Member Bolton's point, is that what are we seeing as a trend there? Because that actually is a significant increase even from like fiscal year 20 to fiscal year 21 didn't increase the same level that fiscal year 21 did to fiscal year 22. And so is that something that may be trending from folks coming back from COVID? Is that something that maybe new students coming into knowing about it, information about it?
So one thing I would caution looking at these numbers is just the kids that were funded through the tuition assistance.
Right.
So there potentially could be other funding sources that if you look at the total
be
number, it may differ.
Thank you.
And the next slide is just kind of pulling together their overall budget on the CPS side. Again, in the middle number column there, the payments to United Way shows the $2.8 million. With the additional spend projected this year, that budget is 11. So just showing, and then last year, as I mentioned at this point, there was no payment at this time. And the next slide, again, is something we talked about last month and just kind of wanted to highlight again. the projections of using up that carryover. So there was levy carryover in the prior years, but as they look to expand certain areas, that will go away. And in 25, fiscal year 25 at the end, potentially, there would have to be another funding source or some other adjustments if everything hits these targets.
Or control spending between now and then.
And then extended as part of normal practice about controlling spending. But, I mean, we can maybe delay, do some controlled spending or what have you, or perhaps additional revenue if indeed our partners in the private sector would be able to raise more funds.
Yes.
And this really does not reflect the amount of dollars for the public's interest, the amount of dollars we're spending on preschool in total. This is final dollars, last dollars in. So, I mean, this is important to recognize.
So that's a good point. So possibly next month or the following month, because November, we can do a larger preschool financial analysis. So the public can understand.
I'm interested in that. I think that's helpful because we've got to face the reality of the expenditures that we're having and dealing with the expansion and the drawdown of the reserve. Great.
So that's all I have on that section.
Great. Thank you. Next.
So I think, Jen, do you want to introduce Kim to kick off the forecast?
Well, Ms. Grumblin-Dy's got the snack.
Oh, I'm sorry.
Oh,
Man,
my favorite chart. Don't leave out my
Sorry.
favorite
We're not
chart.
going to leave it out.
Never, ever. I want this like chart at my funeral.
Oh,
We will.
love it that much.
Michael, take care of it.
I'll take care of it.
Will you take care of it, Mike?
It'll be
Because
your
Mike's going to
eulogy.
speak. Not eulogy.
I'll read it.
It'll be the grants chart.
And when you're-
Oh,
Relax.
I'm counting on that. I
We'll have
love
dot- we'll
this
have dot
chart.
maps of everything you did while you were on the
Oh,
board.
yeah, maps too.
We'll have the maps. I'm in charge of planning.
He's my funeral director. If I do this for any more terms, I'm going to need one soon. Okay, yes, ma'am, go for it.
All right.
Finance is fun.
Yeah.
So this is a listing of all of the individual state and federal grants. So for the month of September, we have a spend goal of 17%. So we do have 23 state and federal grants that total $52.8 million. And then we did meet that spend goal of 17%. We actually exceeded it. Our spend goal for September was 24%. So pretty excited about that.
Okay. See, she's excited to go about the grand start.
And that's important because
Do it.
at the end of the year, there's always this flurry of spending so that we don't have too much carryover because we're limited on some of the state and federal grants on how much we can carry over to the next year of unspent funds. And so over the last couple of years, the grants team, which Cody was part of, have significantly worked so that people are spending it on the children of the year, which is what the money's supposed to be spent on, not on future children. So good job and celebration.
Yay.
Thank you. And so on the second page, the ESSER grants are listed. The second page of the summary. And so the ESSER grants are the second section. So as of the FBR time, we have $194 million available for fiscal year 23. And then the third section are non-public grants, which we have a total of 6 grants that represent $15.2 million. And of those grants, 31% has been spent. So the same measures that we're applying to public, we're applying to non-public, and we're seeing an increase in spending earlier in the school year. So the next slide, if I could see the bar graphs of the state grants. And this is a graphical representation of the spend. So this shows the average year-to-date spend by month over a 3-year period. The gray bar represents fiscal year 21, the green bar 22, and then the blue bar 23. So again, for September, in 21, we were at 15%. 22, 16, and then this year we're at a 24% average spend in the month of September. And then the next chart is ESSER. So the dark blue graph represents the total available to us over a 4-year period, fiscal year 21 through 24. Of that $325 million, we have spent $182 million. So we have spent 56% of our ESSER funding. The gray chart, so the dark gray represents the funds available. As of fiscal year 23, we have $194 million available. And of that, we've spent 51%. So we have a 26% spend.
Could you say that again for me?
Yes. So on this graph, so the dark blue, the 325, that represents the total funding that's available from fiscal year 21 through fiscal year 24. And then of that 325 million, the lighter blue for our graph that's next to that is 182 million. So of that 325, we've spent 182, which represents a 56% spend. And then for the gray, that's what's remaining. And of that 194, we've spent 51, which represents a 26% spend.
The remaining 194 million is remaining over through September of 24.
Okay.
So it's multi-year.
Yeah.
Thank you.
Any other questions? Yes.
I have a question back up on the Title I. And we had a lot of teachers who were doing reading and math. They were reading and math specialists, coaches, district-wide mentors. They were all put back into the classroom. They were all paid for from Title I dollars. So how has that been adjusted? And how is that going to impact the spending of those title dollars, because they're not in title positions now, they're in regular classroom?
So I'll answer that if you don't mind. So the reading and math specialists that were assigned to classroom, their pay assignment and their general ledger account code would have been updated to their new assignment. So that released budget dollars for entitled to be spent to the board's superintendent's priorities.
So what are those dollars going to be spent on to provide supports and interventions for students? Because I don't think that we have as much going on now as what we were supposed to. And how are those dollars, don't we lose them if we don't use them?
No. We're allowed to carry over. Yeah, we're allowed to carry over. And to answer your other question, we'll have the superintendent, we'll have a summary of the changes in the budget. Superintendent, unless you can speak off the top of your head.
No, so the majority of the Title I funding is at the building level. And so because we are receiving carryover, those funds still, the plan has to be established for how those carryover funds will be spent. But the majority, we are required that the majority of our title funds go to the Title I buildings and that they are not centrally managed.
I know that, but there's the hiring is centrally done, and those people were moved out of positions, so there's less staff in those Title I buildings.
And you're talking about the money associated with it as well as the staffing and which account it's coming from.
The money provides staffing.
Mm-hmm.
And I don't want to get to the point where we were giving these dollars. I mean, we were even giving the ESSER dollars to help students catch up, but yet all of our schools are understaffed.
Well, but let's kind of keep the.
But it's all connected.
It's all connected, but
it's the title dollars that are not. The ESSER dollars not being spent to help our students.
Right, I'm trying to get us back to your original question, which I think, Jen, you had the original answer to that regarding it's been recoded. And so that money is being able to be highlighted and maintained and kept in abeyance, so to speak, so that those, and what we were saying about the superintendent then will determine how to proceed with how that is spent and dedicated
how will
to
those title dollars be spent so that
in the appropriate way.
Yeah.
Excellent, for the thing that they're meant for. Okay.
They're meant to be working with students.
So we'll prepare spending.
That'd be great. Thanks for the question, Julie. Anything more on my bar charts that I like to, but not as good as I like to? I say this for the public's benefit because I've sat through any number of meetings where we weren't that sure about our spending habits and spending plans regarding grants. And where indeed we had periods of time where we didn't know very much about some of our grants, at least the board didn't, staff knew. So I appreciate that transparency greatly.
Thank you.
Yeah.
For the second month in a row, we don't have any CRAs to present to Finance Committee.
Well, so much for economic development in Greater Cincinnati. Let's get on to council. I just spoke to a council member yesterday on the phone about something they'd like us to do. I'm going to challenge them. Let's get some more economic development going on. All right, what's next? Yeah, that'd be even better.
Yeah.
By the way, thank you, Mr. Morosky, 2 months ago, raising the issue that we're about ready to start renegotiating that.
Yeah, we are.
Very good.
Yeah, do it again.
Next.
Move on to the next agenda
Please.
item is the set. So in the state of Ohio, every school district, all 615 or 14 of them, are required to submit 2 5-year forecasts on the general fund. One in May and one in November. And because of the timing of all the board meetings, we're presenting the Finance Committee draft of the forecast today and submitting for approval on November 7th. So that we can file by the end of November. And so I'll turn it over to Ms. Hughes or to kick us off.
Good afternoon. So as Jen said, the 5-year forecast is one that is required by Ohio Department of Education, and we do have to file it twice a year, in November and in May. And the purpose of the forecast is to monitor and report the district's solvency, the revenues in excess of our liabilities, and it focuses on our general fund dollars. The factors that influence the forecast, if you could go to slide number 3. It's influenced by the Ohio Fair School Funding Plan, along with any inflation rates, and our CBAs, and our projected versus our actual student enrollment, and any pandemic spending, federal-related budgets, and of course, the impending return items to the general fund, which is also known as the CLIF. Next slide, please. So it's all about the cash. So it's important that within a 3-year window that we are not reflecting a negative cash balance. And upon the board's guidance, that we will not have any new additional levies. So things to consider when we're speaking in terms of positive cash balance. We have to have voter approval on tax levies and renewals, and Ohio full implementation of the Fair School Funding Plan. Also anticipate CLIF plan expenditures returning to the general fund, and that is, I believe, topics that will be in continued discussion going forward. Next slide, please. So the Fair School Funding Plan, and this is the new formula that was implemented back in fiscal year 22. And just a brief recap overview, that it is a biennium, July 1st, 2021 through June 30th, 2023. And this eliminated all of the pass-through funding for the community schools, as well as the scholarships, which would have been like the autism and the Peterson. And it calculates base cost to educate a student that is unique to each district, and that's pretty much based on enrollment and FTEs. I won't read all of these points because I know we're pressed for time, but the last point I want to make is it anticipates a 6-year period for full implementation. However, the last 2 years we're going to require legislation in order for it to pass the next 2 biennial budgets, fiscal year 24 through 25 and fiscal year 26 through 27.
So the next 2 years, yeah.
So this this is part of the plan or whatever, part of the reality, but this immediately affects 2 years.
Partially funded for the first 2 years of the 6-year plan, and then we have to wait until they adopt the new biennial budget to figure out how they're going to fund the next 4 years.
Thank you.
I know the private sector where we've had opportunities to do things like a number of different schools or a boarding school, and private sector folks that were supporting that found out how the state, not this particular fund, but the state does biennial and you're not guaranteed beyond 2 years. A number of very important private sector people withdrew from some of the plans that they were going to be helping us with because you can't, how can you run a business like that? And we said, thank you.
But
Now you get it.
Makes it really hard to forecast.
Absolutely.
Slide, please. So this slide represents the base cost enrollment, and the base cost enrollment is by grade level grouping. It's used to calculate the district's total base cost. So these, in each section of the bar, it kind of represents the grade level. So blue for kindergarten and so on and so forth.
All right, so preschoolers are not part of the base cost.
Next
And one
slide.
other fact, just another quick factor
Sure.
here. The way the state formula reads, it takes the last year if it's higher or the average of the 3 previous years. So that's another reason these numbers may differentiate from our actual head count or FTE numbers.
Next slide. This slide visually shows the state share of the Fair School funding formula. Next slide, please. So the Ohio Fair School Funding Plan, we did have a phase-in process. So for fiscal year 22, we received 16.67 of the additional funding calculation. And for fiscal year 23, we'll receive a 33.33% of the additional funding calculation. And of course, fiscal years 24 through 7, they're not currently set in law because they'll have to be voted on. The DPIA, which is the Disadvantaged Pupil Impact Aid, which is our economic disadvantage phase-in. For fiscal year 22, we did not receive any additional funding. For fiscal year 23, we will receive a 14% of additional funding. And of course, fiscal years 24 through 27, not currently set in law. So the potential loss in revenue as a result of the legislature's slow phase-in impacts us. So we've lost more than 40 million per fiscal year, which would result in 80 million over the state biennium.
Thank you, Columbus.
I have a question.
Yes, quickly.
With the elimination of the pass-through dollars for students in charters and vouchers, because what they were taking from our money to give to those schools in the pass-through was more than we were being allocated, so there were local dollars going to that. How is that? Has that had a positive impact? Because we're not losing our local dollars to that.
That seems like it would happen, but because they changed the whole base cost, it's approved.
Can we see a difference?
See a difference in
The money that we have coming in?
well, yes, much smaller
The
because
money
they,
that, yeah, but it's a dollar for dollar of what we used to get for those pass-through dollars.
so that it's pretty close. So the net, it's less though. I did this analysis a couple months ago. I remember off the top of my head, we used to get around $3,000 net from the state, and now we're getting what's the per pupil after the
4,200.
4,000. We got more than.
No, the base cost was like $7,200, but because on average they deducted more, so the net money that we got from the state formula was close to 4,000. And so now it's 4,200. This is what you're
2,900 is the state share.
2,900 is the state share. So no, it's not helping.
State share then went down.
But that's of the
What we
base
did
cost,
before.
That's off the base cost, and prior to that, the average amount they deducted was off of weighted. So it's too hard to answer in one sentence. Well, I can show you a
Show me
calculation.
that. Now that I
Yeah, do a follow-up on that, but you did, that would be great.
talk about that at
Keep going.
a lot.
Actually,
Next.
The next slide is just an overview of revenues, just to kind of show you the trend lines based on what's being forecasted. The light blue categories, it represents the renewal levies, which over this period, collections from those renewals will affect 4 of the future years.
Bless you.
Certainly, as you get to the 4th year, it would have a bigger impact. So within that, there are 3 renewal levy cycles that fall under this category. The next slide is a visual representation for taxes and property tax rollback. Again, the top column on the last 4 years represents the portion of the taxes that are related to the renewals. The other categories, so essentially for like the last year, if you were to add both blue columns, that would be the tax revenue. So you see tax revenue would slightly increase along with the renewals, but only slightly. So just kind of wanted to point that out from that slide. Another thing that kind of factors in there is the triennial update and the reevaluation process every 6 years. So that's built into the forecast, kind of historically what we've seen there. Statewide, just as we went through that cycle a year or 2 ago, the State Department of Taxation is kind of driving up those values. So we'll see how that plays out each year going forward.
So Kevin, explain the decrease in the property tax allocation.
Yes, the property tax allocation is one of the elements of that is the homestead exemption. And the legislature did change the rules on that to sunset. So people had certain eligibility requirements. And then as those people are no longer owners and pass away, the new owners have a more stringent bar to meet in order to obtain that. So it is also projecting that to go down.
So the qualifying households are reducing.
Yeah.
While I think of that, at the city's green planning meeting the other evening, a participant in the property tax review committee that you presented to and whatever, really we're talking a little bit about this too. And it was said that say this to Member Craig, there might be an interest to, when we talk in terms of city council and us, to review some of the things that occurred as a result of that property tax review, as well as obviously the other parts like CRAs and what have you. But the new council members especially weren't really familiar with the property piece that was achieved as a result of that committee. So we might be wanting to look at some of our old notes and the final report from that committee too, as we get ready for the city council folks. Go ahead, I'm sorry.
All right, no, you're done. Next slide is state aid, state foundation. And actually, to Ms. Seller's point, you can see at least in total revenue. Oh, sorry, did I? No, one right before that, Rob. Between 21 and 22, you can see that in total, where we're no longer getting the revenue for the pass-through. And so we did highlight that there.
But we're also not paying tuition, right?
Yeah,
Correct.
less on.
Yeah. So since this is focused just on the revenue piece, we just wanted to highlight that here, but there would also be an offset on the expenditure side. The other thing I wanted to highlight here is the restricted, which is the yellow or gold bars. We are anticipating some growth there, and that's primarily related to what we hope would be a full implementation, although for forecasting purposes we are not. We are simply holding that closer to where the current law is.
You're talking about the phase-in increase.
Yes, but that will impact. So in the box there, it mentions the things that fall under restricted. The state share of the calculated base cost for student wellness is included there. The DPIA, economic disadvantage dollars related to English language learners, gifted education, and career technical education.
So I just want to also point out, under the student wellness, it used to be an add-on to the state formula. So in the last year of student wellness, we received about $12 million in revenues. Now in this formula, it's subject to state share, so that comparative is about less than 3 million, I believe.
In that range, yeah.
And just quick question
Yes,
on this
please.
also. I think we talked about this either last meeting or meeting before, but part of the percentage we get from the state is also based on the new way the state's calculating that formula, right? And so, in a sense, not only are we not getting the pass-through, but we're also getting a different amount from the state as a whole.
Right.
So we were getting lower, and then also we're getting lower from the state because of the state's assessment of what we can derive from our own taxes.
Prior to the new formula, our state share was at 46%, and now we're down to 40.7.
So we're again, and the loss of the pass-through, but also the loss of from the state formula would draw us lower,
Yeah.
and it's like a double lower.
Dig deeper. Let me keep going, Julie. We'll come back.
Next slide is all other revenue, which, again, I think this was in the earlier slides talking about this format is prescribed by ODE. So, we don't really have the choice to break this down in terms of what's on the forecast, but certainly we can provide more details to that. And so what this slide is actually representing is what is included in the all other revenue category. And there's some big items included there. So as I mentioned here, all other revenue includes the TIF amounts that we received, the CRA amounts, Medicaid reimbursements, and I just highlighted there because in that first let me say, also open enrollment revenue. So under the old formula, we got, since it was district resident, we received revenue for kids that were open enrollment in, and we received deductions for students that were open enrollment out. So just to point out, in the prior years, that's a little bit of a differentiation when you look year to year. The other thing I did want to point out just quickly, in that first column, there's a darker blue operating transfers, and at that time we were, it was the way we were accounting for the CPP transfer, the preschool transfer. We were posting it as a transfer out of one general fund cost center and a transfer into another. So it really wasn't, what we're doing now is doing a journal entry adjustment for the expenditure. It just looks a little bit different, but just kind of comparing apples to apples. The other thing you'll notice, the gray columns, is our advance out number, as we talked about earlier, was a little bit higher last year. And we're kind of just projecting a normal, what we think a normal year would look like going forward. Next slide is expenditures. Again, because this is such, in total, such a high level, that change in state funding did affect expenditures, but it's just not as obvious in this particular graph. The other thing we're highlighting there is, and on the next slide, I'll talk more specifically about the CLIF plan, but just highlighting here that that little extra bump in 25 relates to the last year of the CLIF and those expenditures coming back. So on the next slide, this is a draft update of the CLIF. I know there's been, a lot of discussions about what can continue to be funded once the federal dollars are not available. And so this is just identifying those things that are high on the priority list that will come back to the general fund. There may be other things that could be funded through another source, but since the forecast focuses on the general fund, that's what we're highlighting here. So you'll see in 25, it's potentially 28 million in additional spend for the general fund.
And these priorities are based upon the administrations, or is this based upon kind of the priorities over the last few years for ESSER, or what? How are they priorities?
The priorities, what do you mean?
Well, they're coming back because we're saying that we want them back, and or they are able to be in the general fund. But why is this list? Why does this list exist?
So this list was part of the original list when we created the first 3-year budget.
Yes.
Because the board was insistent that we weren't going to adopt a humongous 3-year plan without addressing how it was going to end, the cliff. This is a revised portion of that, but in the next public presentation of the ESSER budgets, the multi-year budgets. We'll go into much more specifics about that.
Okay, but this 28 and 25 do you think that's the number, or is that a lower number? Because we've not dealt with the full list yet.
Right, it was a $59 million cliff in fiscal year 25. And so we'll show you when we do the next presentation, the original cliff, how things changed and why, and the new recommended cliff.
But that won't necessarily be 28, or will it be the 28?
That is under review.
There you go. Okay. Just trying to remember the numbers.
All right, the next slide talked about the change in pass-through funding and how that affects these analytics. Another thing that was implemented this year is the elimination of the school-wide pool. So in the past, how the school-wide pool was reflected on the forecast was it was a transfer out of the general fund because the amounts needed to fund this pool was roughly 91% came from the general fund, and the additional 9% came from Title I. But the general fund's portion of that transfer out is what was reflected on the forecast as an expenditure that way. So for 22, that's the way it was reported. But what we wanted to do here is say, had we spent the school-wide pool dollars in the general fund, what categories would they have fallen and how would that look? Because that's what's going to happen in 23. Those teachers are going to be paid in those buildings out of the general fund versus last year they were paid out of the school-wide pool. So this is just kind of to show you how we built the estimate. And I know Jen will work with leadership team regarding, building the budget. So for forecasting purposes, we did have, some underspend last year. So for forecasting purposes to keep things, tight, this is kind of showing how we did this for forecasting purposes. So we took last year's actual general fund plus the school-wide pool. We got an initial calculation based on step increases and, there was a small cliff amount in 23 that's included there as well to give us the forecasted amount. So it's a long way to say that we're trying to make a comparison there so that.
So when you actually look at the forecast document, fiscal year 22 is going to look small in expenses, big in transfers. When fiscal year 23 is not going to have that large transfer, but it's all allocated. So we're trying to give you a comparative.
And I'll be celebrating those two.
Yes, I know. That'll be part of your federal package.
I want that too.
I'll put it on the
I lived through, what is it called?
School-wide pool. And you'll see that the fact that we were in the pool.
Oh, yeah. Yeah. Be quiet, Julie.
So you'll see the impact of the school-wide pool, because we were in the school-wide pool, not many districts are. It shows some anomalies in the comparative report cards. I'll show you that later.
Okay, let's keep going.
Yep.
Just have a few more, I think. The next slide really just pulls out just the salary portion. And again, like Jen mentioned, from 22 to 23, our salaries would go from 143 to 315. However, approximately 153 is what was spent on salaries in the pool. So just to show, as we're this year of transition, as we're moving to the new way of reporting that, we wanted to show that here. The other thing that we wanted to highlight is we did include the COLA increase for this fiscal year, but then for future years, as far as forecasting, we're only including an estimation for step increases. Next slide is benefits. Again, the same thing, pulling in the school-wide pool amounts. You can see then that makes that more of a comparable analysis. Next slide is purchase services. In this category, you have two things. The school-wide pool purchase service amount was only about $2.8 million. So school-wide pool was really 95% or more salaries and benefits.
Yeah, it didn't, that's not impacted.
Yeah, so, but we did want to show that. And then also purchase services is where those pass-through dollars were expensed as tuition. So that's the other anomaly on that graph.
Oh, and then 25 actually shows a blip in CLIF because a lot of what's in the CLIF is related to transportation, which is a purchase service.
Yeah, that is true. Next slide is other financing uses, transfers out, again, like we just talked about, showing the effect of the school-wide pool had it been differently last year. This year and going forward, that amount includes the required transfer for classroom maintenance and supplies, which is a capital improvement fund that we're required to do as part of the master
Facility
plan.
master plan. It's a $3 million budget transfer.
Yeah, and then the difference represents general fund obligations, debt that is funded through general fund obligation. And those actually, just for the general fund, are actually decreasing over that period. The next slide is again, a visuals representation of the entire summary, or the entire forecast as a summary. And probably, the key thing we keep in mind is that the yellow is showing where cash balance would be if we aren't able to do those other things such as controlling the spending, and the things that Kim highlighted earlier. Again, full implementation of the state funding plan, renewal of the levies, et cetera.
And Kevin, correct me if I'm wrong, but this slide, the little peachy box at each top it represents the renewal levies. So you can see how the impact if it doesn't pass. But in 27 is when the next levy comes up for renewal, the $48 million.
Yes.
But it goes on the ballot in 26, right? When we decide 26.
Yeah, I actually I brought that graph with me because that was one of the things we had talked about in terms of when we have to go on the ballot in order for those dollars to not drop off.
Yeah.
So we would have about a year of collection and would give us opportunity to try the renewal if necessary. But in terms of the forecast, it uses that actual date. If the levy did not pass, when would the dollars go away?
But we go early as we can, usually, don't we?
Yes. Because you want at least a second opportunity to try to pass it. Yep.
And then I just have the summary slide, which kind of highlights some of what we've already talked about. I would just say, the key for the district is to hold annual spending at or below annual revenues if possible. Certainly that's a harder ask, but
Say that again.
ideally, anytime you're looking at the budget, you would like for your expenditures to be at or less than your intake, your revenues. So we do have a decent cash balance now that we would like to, maintain going forward. So this year, our expenditure budget target is a little bit higher than our revenue intake. And I think that's a challenge that administration will have to work through in the next few years.
Okay. Thank you. Questions about any of this thus far on the 5-year forecast?
So this is a draft, and we're going to relook at it when the ODE releases the formula revenues based on this year's enrollment versus prior year's enrollment. And so that some of the numbers might tweak a little bit between now and the time we present in public.
Mr. Craig, question about 5-year? Mr. Morosky?
I just want to say thank you for this. And every time I hear a report on the 5-year forecast, which is now, I guess, 5 times, I'm just constantly reminded at how unsupported we are by our friends up I-71 and how remarkable it is that y'all, make this happen. Is seemingly arbitrary numbers of, these aren't really questions, these are more rhetorical, I think, but like how we're determining the magic number of 7,200. I know how they determine it. How we're determining what student is experiencing disadvantages. I mean, I know how. And it's always astonishing to me that you all do pull off what you pull off, so thank you. And also to Ms. Bolton, you brought up the 5-year agreement and the tax agreement with the city. So I'm glad to hear that that's going to start happening soon. Another thing that might be good, that it kind of, when you were talking to Mr. Craig, who's sort of our board appointed liaison to, the council for matters important to both of us. And I say this with a tremendous amount of respect, and I mean that. Whenever somebody says something like that, though, it usually means there's it's hard to take them seriously. But I remember the last time we had, this also was inspired by looking at the property tax rollback and all that sort of thing. I remember the last time we had city's economic development folks around here, they were astonished to find out that our levies did not increase with property values. Not surprised.
No.
And it's a pretty basic tenet of this. And so, I mean, we may want to give them some kind of schooling as well, as we get into this, because I don't know. And again, I don't know that anybody really understands. This is what y'all do. So thank you. But anyway, I just wanted to bring that up. It might be something we need to do for them.
We may do some of that in the next town hall. But the fixed sum levies don't increase with value.
Correct.
Fixed rate levies do.
Right.
And then we get new construction money.
Just to add on to what Mike said there, I think one of the things that we plan to do for those discussions that we will have with the city is some of that. The intent is for them to be informative sessions of what we're doing and why and how it affects each of our different sides, right? And so I think that is an important part to discussing with them because of the tremendous amount of new members on the city council, but also understanding how we're funded as a district as a whole and how these things can affect how that funding works because we don't have this great supporter up Columbus willing to contribute what is a fair amount or a fair share to what we, put in, what we require. And so I think that is part of the discussion we plan to have with them is understanding and explaining how our budget works, understanding and explaining how, we can do certain things at a local level, but we only have so much of ability to drive in revenue when the state makes a substantial change to how we're budgeted to compensate for that.
I have just a comment for sure, and I think Kim mentioned this too, is what influences. This was with the intention, this 5-year forecast is with the intention of no new money.
Correct.
All right, period, over and done with on that one. And then the other piece too, to Kevin's point about wouldn't it be great to think in terms of spending what comes in rather than having to spend more, and we know how impossible that is. But I do worry about our amount of money. We've been saved in part by the whole ESSER experience, very frankly, because I think it's the same thing that's happened at the beginning of the Obama administration. We had a flood of some money early in that administration that allowed us to do a number of different things. Where's the inflation piece in this 5-year forecast? What's the percentage inflation that you're planning on in these next, especially the next 2 years? Is that entered into?
To some extent, in turn, obviously with salaries, we didn't make a lot of adjustment in those categories. And the supplies, purchase service, those being smaller, we did actually, I think we modeled in certain cases, maybe 2 to 4% growth depending on the category.
Which means we'll just have to reduce our spending in those categories in order to do that.
Well, I just think you should be able to anticipate when the whole board talks about that. That's going to be the major question, I would assume, from board members that are not on finance. How is inflation impacting on this? And what are we going to do about that? And indeed, that's another thing where we're going to have to be looking at cuts.
Right. So if we took their
right after a renewal passes, pray God.
If we took our current level of spending and added just inflationary practice to it, not the new things in a strategic plan, but just inflation across, we'll be going for new money in 25.
Yeah. So we can't.
Cut.
Right. All right.
So you're right. Yes.
Thank you. Next. Let me hear the next item, and then we'll ask questions.
Next item is the budget.
Mm-hmm.
So, Rob, can you pull my? Well, he's doing that. I wanted to to reintroduce Cody to the team. We created a new position in this current budget cycle called the contract analyst, and that's for the sole purpose of helping the district systemize our return on investment, financial impact efforts, so that we are making sure that everything we spend our money on is driving towards increased outcomes instead of traditional patterns of spending. So, Cody, everybody.
I like your first name.
Thank you. Thank you.
It's a great name.
He's not new to us. He's been, how long have you been with us?
I've been with the district since April of 2019. Started my tenure and stayed under the grateful watch of Taya, actually. So
I'm very excited. He's working very closely with Mike and coming up with processes and being able to track our key performance indicators in our systems so that we can then report out.
Okay.
So we're hoping at some point in the near future we'll be reporting out on a monthly basis our efforts.
Go for it.
Yeah. Okay. So, so the first item to talk about is on the fiscal. It's that time of year where we start focusing on next year's budget cycle, even though we just finished our last one. We have created a planning team, and our first meeting is on Monday. We'll be going through the timeline, all the staffing formulas, looking at needed revisions and updates, superintendent's budget priorities, also starting the conversation outside of our group on the equity index. We're at the point now we're trying to build consensus on the weighting of those factors on the leadership team, and then once we get to that point, we'll begin engaging with our union partners, of course, the board first, and then with students and parents. We have a priority to go back to balanced and zero-based budgeting. So instead of a certain department taking last year's budget and adding new things to it, we're going back to zero and making sure that everything that we spend our money qualifies under our return on investment methodology or equity, and trying to prepare ourselves to cover that inflation going forward. So the target, I want to remind you, the budget target for every year in the general fund is based on the forecast. Okay? So because we need to make sure that we are not over budgeting or increasing our budget so that we will not be able to maintain our cash balances and have to get back to the public. And we are, there's a team of us leaving Monday, Mike and Kim and I, and actually just learned that Dr. Moffitt's also going to the Economics class that's hosted by Georgetown University, which is helping educators across the country learn how to do financial impact analysis, return on investment activities. So we are hoping to make good progress on that. And I also put at the very bottom that, and you alluded to it earlier, Ms. Bolton, about the superintendent's audits. So they're going through school programmatic audits, and we're hoping that the result of those audits will be able to help us inform our budgetary investment decisions going forward. So we will keep this on as a standing item as we go through the full budget process. So one of the things I was asked to do was give an update on ESSER, and we just finished the final expenditure reports based on September 30 payments. So fiscal year ends in June, and then we have until the end of September to pay out all those invoices, and then we ask the government to reimburse us. But so I'm just focusing here on the big three ESSER grants. There's 4 or 5 more that are very specific to early childhood or students with disabilities and homelessness. But this shows you that amongst those three, there's $322 million in allocation. We've spent, as of September 30th, of those 131. We have more encumbered, but this is what we've spent. So the available to spend moving forward is 190. So almost $7 million at ESSER 2. That ends at the end of next September, September 23, which we will more than spend down. And with ESER 3, that has to last for the fiscal year 23 and fiscal year 24 cycles. Next slide. So this is a little bit deeper dive into that. So we have an estimated budget for current year and the next year, 106 million and set at 67 million. We've already spent 13 million. We have 17 million in committed salaries for this year, and we've already encumbered 35 million that has not yet paid out. So for this year's budget, at the original budget, we have 39 million that's budgeted.
Which year are you talking about when you say this year?
Current year, fiscal year 23.
Thank you.
So, and then fiscal year 24, we had set aside about 67 million. But because we've had a little bit underspending in the last couple of years, ESER 3, and I spelled carryover wrong, I apologize, about $10 million of things that have been encumbered and didn't get spent out, so that money reverts back. And then ESER 2, we had about, on the earlier slide, I showed you $6 million of underspend. We've already encumbered $1.5 million of that, so we have $5 million. So we have the ability to reallocate $122 million from this day forward until September 24. And we're working on revisions, because things that we thought we were going to have to spend money on when we had earlier COVID rules and regulations don't necessarily apply anymore. New things have popped up. So the leadership team, Superintendent and I and the leadership team will be working on that budget so that at the next presentation, early December, we'll be presenting with that revision.
I'm going to take the personal privilege of speaking on behalf of the board on ESER money.
Mm-hmm.
The money here and there and all about and all the things you guys have to control and look at and add up and subtract. The board is very, very focused on that total of what's left of ESER. And I would be very careful about making too many decisions without necessarily a significant, more than normal input from the board.
Yes, so if you recall, when we presented the first 3-year plan, I submitted it as part of the treasurer's report, so the board would adopt the budget.
Mhm.
You don't typically adopt a line-by-line budget for all the state and federal grants, but that was a need for me to be fully transparent with the public and with the board. So the budget that we're operating under right now, you've already adopted.
Mm-hmm.
So, like I said before, working on revisions, which will be submitted to the board for a recommendation of approval, not decisions based on.
Well, that's something that has to be explained to us from a standpoint of when we made the decision about whatever you're going to be talking about. Because I think board is assuming that it has some more opportunity to impact decisions.
Yes, part of that public presentation in December.
Mhm.
Yes.
Okay.
And certainly in November's Finance Committee, we could come back with a version of recommendations to get
Mhm.
feedback.
I would suggest
Yes.
that you do that because it's just even remembering back with the Obama administration, that it's easy for the board to focus on that rather than the biggest package before us. And we have so little control over that, and it's such administratively driven. But the ESER is a different thing because that's what the public is asking us about, is ESER, not the budget or the 5-year forecast.
Thank you. Okay, next slide. So moving on to you asked at the last meeting that we come to you with some analysis, one of which you wanted to compare CPS to the urban districts and CPS to the Hamilton County districts, as well as specifically asked about. Would you mind passing that? Oh, we have one for actually. I don't know how many I brought, but and I apologize to the public. I can't put this document on the screen because it's just too massive. But focusing on the Ohio report card, so what they're trying to do is compare the spend on classroom instruction and instructional operations. And they created our comparative group, which is any district that's over 10,000 students or more, which seems a little unfair given there's several of us that are so much larger. But so I've given you a list of who our comparative group is. To the left are
Ridiculous.
right, and so we typically compare ourselves to the other urbans, which is on the right-hand side. Next slide. So there's basically three measures. One of them is how much money annually do you spend on classroom instruction versus non-classroom instruction. The per pupil spending and the source of funds, which the source of funds only shows up on the district report card, not on each individual school's report card. And then some issues that I have in some of these comparisons or things to note when you're doing these kinds of comparisons for the public to know is that this physical size of the district has an impact. Because we have 90 square miles, and when you're comparing us to a district of 10,000 kids, their transportation costs, their efficiencies are going to be different than ours. On a school-by-school comparison, we noticed that the state's per pupil spend does not change based on the school type. For example, the average state spending is operating spending per building is $11,246. That doesn't change whether it's an elementary school, high school, K-12.
To me, that's the most absurd part of this.
It is.
The idea that you're going to be educating elementary kids at the same expense that you're educating high school kids.
Correct.
So it's totally flawed to begin with.
On a school-by-school basis,
yes.
Yeah. So there's also a non-standard use of how we code our expenses. So just district to district, some of our and for us, some of our accountants are in the clerical union, where in another district they're not. Technology is the same way. And so I know from talking to my own colleagues that we don't, some of our districts don't pay as much attention to the function code. So the function is whether it's elementary instruction, high school, secondary, or disabilities, versus the way we do it. And so when you compare spend, it's very different. To me, it's very apparent when you look at the in-classroom instruction, because what I know about our collective bargaining agreements with paraprofessionals, we have way more paraprofessionals than any of the urbans do. Those are supposed to be considered part of classroom instruction. And if they have higher classroom instruction spend than we do, that seems very odd, backwards. Also, the use of ESSER funds. So if ESSER funds are included in this data, so if one district is using all their ESSER funds on facilities, building, that's not classroom instruction, and another district's using ESSER funds like we do with reading specialists and intervention specialists, then that would have a different impact on the classroom calculation. And then, as we said before, the fact that we're in the school-wide pool has an impact on the spending from federal funds is very significantly different than the other urbans.
But that will be changing in the next report card?
Yes. Yes. So
I will celebrate that too.
So the spreadsheets I've handed out are kind of like all the big details. But next slide, please. So when they talk about the percentage of money that's spent on classroom instruction, the way they categorize it is this huge formula of definition. So under classroom instruction, teachers, paras, classroom supplies, textbooks, pupil support services, and instructional staff support services, versus non-classroom instruction is general administration, like the principal, the school, maintenance of the plant, and transportation, food service. Skip central office for a second, go to non-operating. Non-operating is construction, lands, equipment, debt. So then they take the central office allocation, so like the treasurer's office, for example, and they will allocate my expenses out to on a per pupil basis each school. So those are their categories. Then they use a weighted equivalent of students. So our report card data for enrollment last year was 35,680 students. On a weighted basis, they used 50,787 because of the increase in weighting with students with disabilities, gifted, economically disadvantaged, ELL. So if you go to the next slide, I'm comparing just some high-level us versus the big urbans. The average calculation does not include CPS, so it only includes the big urbans. And why Lakota is in there is it's new. That's a new one on our comparative group. And so what I've done on this spreadsheet, in pink line takes Lakota out because that's not typically part of. They're so significantly different from us that it
Thank God.
shades the averages. So In here I have,
Eva, this is something about the report card.
yes. And I'm not Eve.
No, I was asking.
She's asking me if you I've been doing it. She does.
So, I have some interesting types of tidbits I put on here. Okay, so on the big urbans, Cincinnati is the second largest, and in terms of enrollment. On percent of classroom spend, 67% versus an average of 66.
So we're second, was he
Second
as
in
being,
We're larger than Cleveland.
Yes.
Cleveland has
Students.
94 buildings.
oh, you're talking, okay, not in
Well-
enrollment. In enrollment, we're third, I thought.
No.
No, now we're second.
Second again?
Yeah,
Cleveland
Columbus,
has 34,000.
They're gonna have fewer. They're going down.
yeah, continue.
Yes.
Thank you. So Columbus is the only district that's larger than us at 45,000. So, but.
And half of Columbus is really not urban.
The percent of spend, the range is very small, and we are well within that same range. So we're very reasonably 67% versus the others. And then the operating per pupil, the odd part is the minimum, the low, we're at 12,763. The average of the urbans is 12,976, so very, very, very similar. That does include Lakota. Lakota's at 10,000, and Cleveland's at 14,000. So Cleveland spends more money in operating per pupil than we do.
But you do these columns as average and minimum and maximum.
Yes. So here's what I wanted to point out, though. On the federal funds line, you see how CPS spends $6,444 per student versus the average at $2,000. Even just for the urbans, it's an anomaly. Part of that is the way we're spending our ESSER money and the school-wide pool impact.
Explain that.
So we're using a lot of our ESSER money in the classroom, supporting students and teachers, versus other districts who might not be doing it. They may just be using it on construction and things that are outside the classroom. So that has a difference.
That are
And then
permanent.
The school-wide pool is considered a federal grant. Because it's a 500 series, it's a federal grant, so it's part of our federal spending, even though the general fund represents 91% or something like that of it from the last year.
So much of it's apples and oranges, and it's going to be less apples and oranges next year.
Yes. We hope. It depends on the ESSER impact across the districts, but it's just it's a way to explain why there's anomalies and trends. So next slide shows you CPS compared to the 21 Hamilton County districts. I didn't realize there's 21 until I had to do this exercise.
You have to listen to me. Tell you there's 21. It's the only number I know.
And it's just, there's really no comparison financially on, we are both the averages on everything except for the percent of classroom spend. We're in the middle. So,
But to memorialize Miss Spates, these are our competitors, not Cleveland, not Columbus.
correct.
These
In
are the
terms of
people,
competing for students.
marketplace.
And employees. So you can, so then on the second page of this document that's very large is the work that Joyce and Kevin did on terms of preparing their school by school. I did a little bit of organizing to make it easier, but so I sorted it by type of school. So all the elementaries are coded together, high schools are coded together, the K-12s, and then the tree schools. And so you can see, and then I gave you a notification on the last column to the right. If it started, it just means their spend is higher than the district average of that group. So this is where the weighting of the students has a bigger impact on the percent spend. And don't make the mistake to think this is how we fund schools individually. I don't want people to think how it has equity impact, but this is on how the school spends the money and it to expend. So they may be allocated a larger budget than actually spend. So that might have a difference impact too.
So, Jen,
Mr. Craig.
yeah, and I apologize. I actually have to leave a little bit here early, but I wanted to ask a quick question, or maybe point out something within the information you gave us. Is that where we spend and where we are receiving revenue, or where they're counting the revenue we receive, is clearly very different in how those numbers mark out from the other two major, like between Cleveland and Columbus. Yet we still are, like, we're actually getting less, and we're actually having to do more with less from the state. And it's substantially less than almost everyone else, including, even if you include Lakota. And I think it's just, is there any possibility or any thought with regard to, even when we lose this school-wide pool, whether or not that reflection will still be as dramatic a difference? Because I think one of the struggles that we have is that we are accounted as being a wealthier district, whereas we still have the fewest number of buildings those between the two other districts.
Yeah.
We
So,
still have the limited amount of stuff that we can do without some great expenditure.
so with the state formula, as long as they consider property wealth as part of their indication of wealth, then it's not gonna, it's always gonna hurt us when it comes to educating the same types of students that those other districts have. And so when I was working through this, I thought it'd be really cool if we could do this level of detail on the weighted students comparative to those other two districts that we're so close to see how the mix of students would come out differently.
Because I do think, the conversation that we continue to keep having with how the state does this is that they measure it based on the folks in our district, not the students who attend our district.
Residents, yes, it's property. So the wealth index compares property values that are in the district, regardless of whether the students attend us or not, federally adjusted gross income, and then the median income. And those three factors are all put together in a formula, and it's this really weird comparative thing. So if you're in this quartile, then you get this kind of weighting and that weighting, and so it's very harmful to a district like us.
Thanks.
But I did calculate the number of buildings. I added that in the average enrollment per building because I wanted to see, I was trying to see the difference between the size of and how efficient we are with our buildings, because that makes an impact. If you have lower average student enrollment per building, then you have higher principal costs, utilities costs, right? Than if you are more efficient with your enrollment and your building capacity use.
I'm going to suggest too that with this knowledge, even though we have apples and oranges or whatever, and internally comparing our own schools, a couple things. I think this should influence our budgeting process.
Yes.
Not instead of, but in addition to formulas that are in the aggregate kind of thing.
Yes.
So I think this is crucial. I think also we can make the statement that the new budget probably has to, and certainly the first couple of years of the 5-year forecast probably needs to deal with facilities from a standpoint of consolidating facilities, better use of facilities, because we'd be broke now, interestingly enough, if our taxpayers and voters had not voted for the facilities master plan.
Right.
Because we got right-sided. And it's time to right-side again in order for financial as well as programmatic. And I think that we have to really emphasize that. And I think we probably will have to do a bit of education with the whole board about what you just did with us today. And this board needs to see this large chart and what have you. But I think, too, the other thing you all said about spending what comes in versus spending more than we have, and the whole piece of contracts.
Yes.
We are just,
Yes.
I could use a physiological term, but I won't. We are blanketed away on these contracts. And I'm not talking about the collective bargaining. I'm talking about all this other stuff.
The outsourced contract, yes. So
Unbelievable at every school site. And so this is crucial. So hopefully Cody with the good first name is going to come in and he's going to be able to help us do that, because that's just maddening.
Right, and that's why we made the investment in Cody's position this year to help us through that.
Absolutely.
Yes. So,
Mr. Morosky?
Okay.
Julie, did you have a couple of quick questions before we keep moving?
So on page 6 of the forecast, it talked about the formula went from 46 down to 40. Is that due to increases of property values that were getting less, or is that due to them pulling out the dollars?
So I did a presentation on this like 2 months ago, I think. It's a combination of the triennial update on property values, so they went up, and our federal adjusted goods income went up because of the COVID support from the federal government.
And then who is sitting on the city's property tax review committee? That's on that committee.
No idea. No, I don't think we do.
It's gone, it's been said, yeah, I did, and we sat, it lasted, what, a year and a half?
And
And,
they still,
well, the one I'm talking about has been sunsetted, and now the one that's there, I don't know that we have anybody.
I didn't know we were supposed to.
I don't think I don't think we've been invited.
if the TIF, I don't know if when
Smother
you were
and
talking
invited
about
us.
the TIF financing on other revenues, what about the pilot payments? Are you talking, because the TIF, I thought those were dollars that are coming from us instead of the pilot.
The pilot payment, the payment in lieu of taxes is based on the Community Reinvestment Act
Yes.
and the abatement agreement. The TIF payments are TIF district projects. And then we
Okay.
get those from other cities as well as cities. Townships.
But they're taking the money of the increased revenue of taxes within that district, and it goes into the TIF fund. That's how the TIF fund is funded.
Except for what they pay us.
Yes.
Yes.
But that is a small amount. How much is that impacting us? Because remember on December 31st of 2019, when they added like 16 additional TIF districts?
Yes.
And they were supposed to set up a TIF review committee at that time?
Yep.
That hasn't happened. But I know that they did the reevaluation of property taxes in 2020. So all of those increases, what we were collecting in 2019 got frozen, and then any increases in property taxes then goes and funds that TIF district for those TIF projects. And then we get back just a small percentage. That's what I wanted to know.
So we're preparing an updated analysis on CRAs and TIF income.
Okay, can I be part of that? Or can we do
Well, we're
that?
going to bring it to finance committee.
Yeah. And join us then, Julie.
And then there was another, here, on page, I have 2 pages of questions.
Julie, while you're looking for that, I would like to add, if I could, for what we just talked about regarding facilities and the importance of facilities. It would be great for the umpteenth time if the administration could produce a listing of all the properties, both land and buildings that we have.
That we own.
That we own, yeah, because I think we're gonna need to talk that, and also for the umpteenth time, do we have enrollment for this year by building yet, or would we have that in November?
Probably in November, because we typically, that would be a question for the superintendent, but typically we take an extract on October 15th this year. And so we use that extract to do projections for the new year, and then Jeremy would do a presentation.
Right.
Yeah, so I'm
So
guessing we'll come in November.
if we could have that at the finance meeting on the transportation enrollment and the facilities piece.
List of yes
Properties, buildings and property, it's land and whatever, what we own
And then enrollment.
by building.
Yeah, and then what was the third one?
Transportation, we need another report. It's,
Oh, you mean of service?
yeah, service, and then it's, I know we don't have an RFP that's due, do we?
They're in the
Because it would
process of
test
that.
for 5 years, unfortunately.
So the RFP is in the process of being written, I'm told, for 10 vans and 10 buses.
Oh, that's our fleet.
When you're talking about
Yeah.
RFP, what are you talking about?
I was talking with our fleet is the buses and the van thing that we've been talking about.
Yes.
That's
So
cool.
that's underway, yes.
That's right.
But I will tell you that our COO cautioned me to say he knows districts in years.
That's right. We're not going to waste another week.
Okay, so I'm sorry, I misunderstood you. You were talking about the transportation RFP services.
I do, yeah, because there shouldn't be any because we're still in pretty long
We
year
just did a
contracts,
RFP, Yeah.
right?
Yeah.
But I do think we need an update on service.
Okay. Yep. Got it.
Okay. Pat?
And this is for what?
November.
For November's finance?
Which
Yeah, we
is
take a whole folder
very
and
soon.
have everything in
2
there.
weeks.
Yeah.
November 9th.
Is there, before Mike has to go,
Let's go.
you good? Okay, good.
For now,
Keep
yeah.
going.
Well,
I mean, I'm not going to stay here all day, you know.
Oh,
Come on, Miss
really?
Bolton. I mean, I would hang out. I would like to,
I've had my 2 Snickers, so I'm really
you know,
smart.
you know.
Okay, so looking at the agenda, we've covered the financial reports, the 5-year forecast, the budget, the report card analysis. Wasn't done on my slides. Can you bring that back up?
Thanks for coming.
Yeah.
Oh, KPI.
Okay, so what do you want to cover next? Do you want to cover the department KPIs or the facilities table that you asked me to add dollars to?
Just do the KPI. That's
Okay.
cool.
So we created several years ago, actually, we started tracking productivity key performance indicators of the treasurer's functions when I first started as the treasurer 7 years ago. And so we went from spreadsheet sharing to Mike and his team created these beautiful dashboards that we converted back in 21. So there's actually 10 sub dashboards, 10 functional areas, and we look at 41 different measures every month. And the way we do it is we have the owners of each measure presents out to the rest of the group, and people are encouraged to ask questions. They're supposed to talk about this particular measure, it went up, it went down, why, what are our challenges, what are our struggles. And it's a really unique collaborative way. We've got some very positive feedback, some suggestions for improvement on moving forward. We actually last year added, instead of Jen being the one challenging everybody on their measures, I step out as a participant, and then they elect or nominate a facilitator each month that rotates. So they get practice in leading a conversation, and some of the feedback we received is that, number one, they're learning how to analyze data for performance improvement. 2, it's helping them to understand each other's impact, each other's functions, and how their function has impact on the other function. And so it's been a really good growth opportunity in culture building. So I'm going to ask Mike to share the dashboard drive for me so I can talk. I'm just going to give a couple highlights if I can go through.
Top right side. And I can click that. Share screen. So you have the phone that hangs up, the people, and then you have a couple of image pictures. It's right above polls. Sharing.
So is he a presenter?
It's Halloween.
Mm-hmm.
You notice we've gone through finance without it. I just changed
Yeah,
it
great.
now.
Yeah, no.
Okay, so while they're doing that, I'll just give you some quick highlights. So our payroll team actually has 2 tabs. Some of the data they look at are payroll errors that come through, ACHs that get returned, because now employees on Employee Online put their own bank account information. If they have a typo, the bank rejects their paycheck. And then we have to, so we're trying to monitor that improvement on that. We've been tracking late time cards and payroll errors to make sure that we are fixing data that drives an error that's on a paycheck, regardless of where it occurs. We've made some progress. You can see some cyclical changes at the beginning of the year. There tends to be a lot of changes. And the accounts payable team, they focus mostly on getting better at paying invoices, so that we focused on reducing the amount of invoices that we have in our system that are beyond 60 days. They made a significant improvement over the last couple months, like 86% improvement over the last couple months. So that's excellent. So we're keeping our vendors happier, as well as our customers, because then they have better relations with the vendors. And then the other highlight is on as a performance indicator of how well we're serving our schools and our departments. We look at how many times we reject requisitions. So when the school enters a requisition and we have to reject it for whatever reason, they use the wrong funding source or the wrong general ledger account code, we're trying to be better at educating them on how to do it right the first time. So that feeds into our need to receive quality improvement team to shorten the cycle. And we've made some significant inroads. So when we first started looking at the data several years ago, we were rejecting 65%-ish requisitions the first time they submitted. And now we're down into the 30s, I think. Are we not having success in sharing? Okay. So we're focused every month on how do we do our job better so that we better serve and be better stewards of taxpayer dollars. So the financial tech team looks at business plus downtime. We have the position control that looks at how fast we add positions once they're requested, and managing the negative vacancies, so overfilled positions, making sure that we're not doing that as people move through the system. There we go. So go back to the payroll one. Yeah, go back to the payroll one.
Trying to catch up to you.
Oh, yeah. So position control, so the negative vacancies is on the left-hand side, and a negative vacancy, all that means is that we've overfilled a budgeted position. Doesn't mean we're overstaffed, it just means that...
I'm glad that Julie's gone by this time.
Because she gets so confused about it. But
Oh, geez.
so you can see when we first started tracking the data how high the numbers, visually high the numbers are. Are you changing or should we just stay here?
No, I'm putting you back there.
Okay.
Sorry.
So you can see on the left-hand, that left chart, you can see how high the numbers were when we first started tracking this data, while we tried to figure out what was wrong with the process that was causing all these issues. And so now we've got it down, and we got it down to almost 0, which was our goal. And then at the beginning of the year, it flips up a little bit because people are changing positions, and it takes a while for everything to catch up. But we're making progress. It's been what we learned from this is not one of us in any of the 5 or 6 departments that have an impact on this understood the process from beginning to end. And so it was a very enlightening exercise. We've worked really hard at it. And they got tired of Jen having tantrums when I didn't see the data move. The chart on the right shows you what are the average number of days it takes us to process a position request form. So if somebody in the school says, I have a compliance issue, I need a 3rd grade teacher, fill out a form, how fast do we get it through the system? And you can see we've made marked improvement on that. So you want to flip back to payroll on this for me. So we track data, and then we track trends. So this in the month of September, we made 17,000 paychecks. We didn't cut them; we just processed them, right? Because we're all direct deposit now. Our last holdout converted last year for us. So the difference between off-cycle errors, off-cycle plans. We wanted the plans off-cycle, so when we do sick leave conversion payments or supplemental runs, those aren't errors, and so we pull those out of the error. So 180 off-cycle, that means we're fixing errors. We have to do 180 checks in between payroll cycles in order to fix a problem. But our error rate's still at 1%, so 99% of the time we're getting it right.
Okay.
Yes, thank you. So you can see we also look at our trends. So the not doing so well on the average late time card series, but on the left-hand side it talks about the error rate. So you can see we were much improved out of the last year. We had a fairly big blip this year, mostly attributable to a huge turnover in those that handle paid assignments and the delays it took in getting all that fixed. So making significant progress. You can see it's on its downward trend again.
Okay.
Oh, yes. Yeah, go to the...
Do spot fast.
Yes.
We're losing a quorum in a minute.
The record, sorry, do you have the version on the screen there? Okay, so the graph on the left is the average days of going from the date of the requisition gets created to when we get it to a PO. So how fast are we doing? The blue line represents all requisitions. The green line below it represents SPOT. So SPOT is more efficient, and SPOT stands for the Supply Procurement Operations Team. It's 2 very talented ladies who do the financial transactions on behalf of schools. And so they don't have to worry about how many quotes do you need, what's the right general ledger account code and all that. So they're more efficient because it's easier to keep 2 people highly trained than it is to keep 10 schools they serve highly trained.
Sure.
Right. And they know how to navigate when there's a problem. They know who to reach out to. So you can see that the pilot is making a positive impact. And on the one on the right is the average days contracts. Oh, for contracts. We track that separately because some contracts sit in my queue for several weeks waiting for a board meeting to happen. And so we don't think that's a delay in our productivity, but.
And we're not meeting any more than we have to at this point in time, since we meet more than anybody else, any of the school districts in the state of Ohio.
Combined.
But we started with the average days with over 10. I think it was closer to 12. It took us 12 days to convert a requisition, so an ask, into a purchase order. And now we're down to 5, which is pretty good compared to industry standards.
Yeah.
And on average, we still room to improve, but anyway, so I just wanted to share that with you all, and we can certainly.
That's great. You're just boasting. That's okay.
Yeah.
It's important to do
Well,
that.
we need to. We have awesome teachers.
Absolutely.
100%.
No question.
Okay, so back to my PowerPoint. Thank you, Mike, for driving. Mike does all this beautiful work for us.
Well, thank goodness.
We have multiple stars today. We have our forecast team over here and our dashboard team.
I
and
know.
our
Be
contract
proud.
team.
Be proud.
Is always
Just going around the table for the public was impressive.
So this is the table that I shared last month, and you asked me to add the dollars. So I did. I added the budget, ESSER budget for each program. So, for example, the Walton Hills Dome budget was 6.9. We've obligated all of it, and we've spent 4.2. We've actually paid 4.2. Okay. So then the cafe is a newer plan, a newer project that was revised upwards to almost $6 million, and we've obligated $2.5 million, spent 1.6. And most of that was on the design and stuff like that. Pleasant Ridge and Hyde Park are still fairly new projects. The original 3-year ESSER plan had a budget of 7.9 for Pleasant Ridge, and because of COVID and construction delays and lumber costs, the budget increased by $1 million. And so same thing with Hyde Park, went from 8.9 to 10 million. So we're spending $32 million of ESSER funds only on facility construction projects. Questions?
I don't have any questions about that, but that's why I do want to see some of the listing of properties and land and whatever.
Yes, I have that noted for next
Yeah,
month.
do that for next, because there might be some ESSER nominees or something. I doubt it, but.
Okay, so I think I've covered all the topics because the update on the transportation RFP they're writing it as we speak.
Right.
Okay.
Any other topics or items or agenda that we didn't get covered? Everybody check our thing. Different listing. But I think we're good.
I believe so. I checked them off as we went.
Uh-huh.
So just to reiterate, next time we're going to do a follow-up on the halftime, full-time, on why that trend is happening for preschool.
Yeah.
We'll prepare an overall preschool financial report, an update on the title funds that are being repurposed because of the pulling the reading specialist, math specialists back into the classroom for core vacancies, core content vacancies. An analysis on impact of the pass-through funding. I'll have to pull that. I just have to find it. And continuing an update on ESSER presentation, the original clip versus revised, and what those budget recommendations will be.
And I think y'all, I would really like it if both the superintendent and you and others would start to say, not their recommendations, but it really would help dialogue if you would instead say options or possibilities, possible recommendations, just because you have board members, the minute they hear the R word, oh, well, we have to totally agree. I know you want us to, but I mean, that's also stifles any kind of participation.
Duly noted. Thank you.
Thank you.
So I noted that, well, that's not really for the next meeting, but I noted that you want to make sure the fiscal year 24 operating budget deals with the facility and capacity use, excuse me.
Yes.
So a list
Is
of
there savings
CPS property, land, by property, and state on use.
Ma'am.
And then sometime soon, we're going to be doing a presentation on the CRAs and TIFs.
Okay. We might want, based upon Brandon's involvement too, we might, and Mike following, maybe some more, if you can think of some possible topics that are the financial, where we have a connection with the city. I mean, not to have a long discussion about it, but there's things, I mean.
Okay, so.
That'd be that property tax.
Wouldn't it be, yeah, TIF, property tax, DRA,
Yeah. Or whatever
it's going to be called.
Thank you. And we didn't do this piece of paper. Will you have this in our giant form again like you did last year?
Yes.
Thank you.
I'm going to present
To the board.
Once it's revised because of the state updates, but this is the way that matches the PowerPoint that.
Gotcha. Well, and I like that rather than me taking a ruler. Appreciate the explanation. The narrative is, I think it used to be called. We are adjourned. Everybody have a great weekend.
Awesome.